Welcome back, folks. We're going to be talking about risk management today, which is a topic that not a lot of people like to touch on because honestly, a lot of people just don't have risk management on YouTube. They're fake trading, they're not real trading, and they don't really touch the topic because it's just numbers that they don't really understand and they don't put it in a practical setting. So we're going to be doing so today. We're going to be comparing two different models, a 10% of available drawdown versus a flat number model, and the benefits of each and what I actually utilize to, get my funded accounts and get payouts. So the thing that I used to do was flat numbers. Flat numbers would basically mean that I'll grab my available drawdown. Let's say it's $2,500. And so I would divide it by a certain amount of trades that I want to have as breathing room in order to not hit the max drawdown on the account. So typically speaking, I would do either 10 or I would do 15. So I would grab the 2,500, I would divide it by 10, for example, and that would give us $250. And so I would go $250 flat for every single trade on the account until it either blows up or I pass the eval. The benefit of doing something like this is that if you're doing pretty good and you start off the account very strong, you don't get into a lot of drawdown, it's pretty easy to just kind of jumpstart it into passing a lot faster. The problem with this approach is you're not always going to have a hot start to your account. Reality is that you might start hot for the first trade and you might go on a losing streak of 3 trades or 4 trades in a row. Despite what YouTube gurus tell you, even if you have above 50% of a win rate, you will in fact go on a losing streak of 4+ trades in a row. It does not matter that your win rate is above 50%. You will actually lose at least 4 to 5 trades in a row. Even more than that sometimes. The market conditions might not be right. You might not be in the right place mentally to be taking the trades, and you're forcing things out of the market. So doing an approach with where this is only gives you about 10 trades to work with, it's pretty high risk, high reward. Now, old me used to say, well, if you have money to spend it on the evals and it's not a big deal financially, then go for that because it's faster. New me would tell you otherwise, because the way you treat your eval is the way you're going to treat your funded account. So if you're doing poor risk management on your eval, you will also do poor risk management on your funded account, and chances are you just won't get a payout at all. Now, what I do currently is 10% of the available drawdown of the account. Now, it might look the same at first when we do it, but it's not quite the same. So $2,500, right, times 0.10, that would be $250. So same initial trade. Now the difference is once I lose that trade, for example, and I only have $250, I would then do the same thing times 10 equals $225. So my risk is going down as I lose trades on the account. What this does is it slows down the equity curve so that when I'm taking trades and my equity curve starts here and I start losing trades, it becomes flat the more you lose. And so will it be when you're gaining, right? Like you're not going to gain as much at first if you're in deep drawdown. But as you gain more, you start gaining more and more and more and more, and it becomes an exponential account eventually. Now, the benefit of this is, again, the slowdown, but also when you are funded, and you're not just funded on the same account. We're talking about real cash, live funded accounts once you're past the same stage and so on. And you actually have more available drawdown than when you started with, like 5K, 10K, and so on. Your risk is increasing as the account is going, and you're able to really compound the account to higher amounts. If you do a flat number, the issue with it is you never really have room to grow unless you set specific milestones where, okay, once I get it up to this level, I'm going to increase my risk. The problem with that is once you get up to the level and you increase that risk, you still only have now 10 trades available worth of drawdown, right? Because you increase the risk to that flat number, and that's the permanent risk that you're going with. It's really hard for you to choose that and then backtrack from that. So let's say you set a milestone. Okay, once I have $5,000 of available drawdown, I'm going to risk $500. So that's 10%, right? And that would mean that it would give you 10 trades to work with. Well, that 10 trade room is really tight again, you're going to go on losing streaks. So you're going to lose eventually 5 trades in a row, which means that you lose $2,500. So you're back where you're starting in terms of the $2,500. But now, will you actually want to do 250, or are you going to stay at 500? Most people will say, well, of course I would do 250. Reality is that most people don't actually stick to that rule. They say, no, if I go down to 250, it's going to take me X amount of time to then recover. It's too slow. I don't want to deal with that. And then they just blow up the account and they start all over again. So this is my recommendation for everybody to do. 10% of the current available drawdown. That's what my mentor taught me. That's what I currently do. And I wanted to just bring up some examples here from my my funded futures account that I did for my students, where I basically show them every single trade that I took for a month, and I did the executions in front of them and so on, just to kind of show you what that looks like. Now, my risk to reward might be different than you who is watching this video. It may vary gravely. I mean, sometimes my trades are 1 to 2. Sometimes my trades are 1 to 6. It just depends on what the idea is, where the take profit is. But regardless, the advice would still be the same. So as we can see, obviously, I only had 2 red days on the account. I had 3 days in a row, 2 days in a row, red day, and then 2 days in a row. Now, the winners are here. Win, 2 losses in a row. This one was a break even, really. 2 wins, 2 losses in a row, 2 wins, 4 losses in a row, and then 4 wins. Now, when the 4 losses in a row were happening, you see 345, 226, 198, 130. So as I'm losing money, my available drawdown is going down with the account, which allows me to slow down the equity curve. I'm not losing too much at once, and I'm able to better recover. Once I bounce back, this trade here, it's a $150 trade. I happen to get a really big chunk on this trade. I think it was like a 1 to 6 risk to reward ratio on the trade. But I wouldn't have caught this trade had I been using 250, 250, 250, 250, because I would have lost 1,000 pretty much all at once, right? And so for this trade, I probably wouldn't have risked 250, or I would have been scared. It would have messed up my psychology and so on. So it's not that you can never do so, but it's more so that it's harder to stick to your plan when you're having these heavy blows on your account going back and forth. So my suggestion is, if you keep the 10%, you don't have heavy blows, but you also don't have heavy swings. When you're on the positive side of the curve, as you can see in the beginning, I was getting pretty big trades to move me forward because they were winning trades and they were 250s. But once I started losing, it slowed down the trades so that I'm not blowing up all at once. You can see that my average win is 543. My average loss is 233. So I have a little bit better than a 1 to 2 on the average. My best trade is 1,000. My worst trade is 350. So again, my best trade is significantly way better than my worst. My win rate was about 50%. My profit factor was 2.62, meaning an expectancy for every dollar I'm risking, I'm going to be expected to make about $2.62. That's what that means. Okay. Now, this is a really short example because there's only 17 trades. But on the funded account after this, the stats look very similar. My profit factor did drop a little bit. At a little bit over 2, but it's the same idea. So this is only, a thing that I can do because of the fact that I am able to just slow down the equity curve. I'm going to show you guys the funded account now for this specific eval so you guys can see it. Okay, awesome. We are back, and this is the funded account. So on the funded account, as we can see, I started off with a loss. Then I went in a winning day, losing day, 2 winning days in a row. Let's go to the next month. Losing day, break even day, losing day. And then I went on a winning streak for the past few days. Now, the best trade is 893, so just a little bit worse than the eval was. Worst trade is 271, so that's a little bit better than the eval was. Average win is 315 versus 163. So again, it's about 1 to 2. Win rate, it's 50%. This is 33 trades, so it better reflects my actual numbers on a longer period of time, because if you add this plus the eval, that's about 50 trades, and the win rate is still, again, about 50%. Now, what I want to show is this is only the case because I'm able to slow down the equity curve from crushing against me. As you can see, when I started off, you know, pretty high. We got almost all the way to the max profit that I need to be able to start getting withdrawals and so on. But then we started crashing down. But as you can see on this crash down from this peak to this very low, it slowed down quite significantly because of the first portion, which was the regular 10% risk. So that was the 250 per trade. Those were the heaviest blows. After that happens, you can see the account just kind of flatlines because you just don't have as much available drawdown. So you can see that the account is not taking as heavy blows as it was before. And then when you pick back up again, you take off and you go all the way back up a little bit faster because you go on a winning streak. Now, I'm not saying that you will go on a winning streak all the time and so on, but if you have a 50% win ratio, you're more likely to have a losing streak and a winning streak. Like, it's going to happen on both sides, but it's only going to happen in both sides as long as you truly do have a 50% win rate. You can only do something like that or higher if you're able to follow the plan correctly, consistently, without having any actual, fears or issues when it comes to executions and so on. So let's go down to the actual trades and show what the trades look like. You can see about 250 down. This was a break-even trade. 250 up, $400 up. This was a break-even trade as well. $60 up, $400 up. And then I went on a losing streak. 200, 214, 100, 169. I don't know why this lost 100. It was probably supposed to be more than that, but it lost a little bit less than. But as you can see, again, big trade, big trade. Okay, much smaller, much smaller. Then we're going a winning streak, or 50, which recovers literally all the trades pretty much. Well, it recovers 2 of the trades, and then the next 450 recovers those plus profit. Another win, another win, another win. But then I go on a losing streak, and the losing streak was massive. 271, 260, 190, 155. This 190, I think, was supposed to be 150-ish, but I got slipped out for whatever reason. And then this trade was, if I'm not mistaken, it's supposed to be 130, but for whatever reason, the micro didn't take me out where it was supposed to. 143. So 1, 2, 3, 4, 5, 6, 7 losing trades in a row. This is a break even. So this was going to probably be a losing trade. 7 losing trades in a row. And again, I just showed you guys my stats. I'm 50% or more. So if I'm 50% or more and I'm literally losing 8 trades in a row, there's no reason why you shouldn't lose 8 trades in a row. It's going to happen. Most people win rates don't even sniff 50% a lot of the times. So this is really, really going to help the trader who is really trying to become consistent into the account, getting payouts, and they're not trying to get the Lambo tomorrow. They're not trying to do flashy stuff. They're trying to do their best to survive on the account for long enough to let their edge on the market actually play out. After that, win, win, win. So winning streak, 1 loss, win, 1 loss, win, win. And so I'm in a massive winning streak so far. And I already withdrew them from the account. And I pretty much already recovered most of the drawdown that I took out from withdrawing on the account. So anyways, that's the video. Try that. I have this little sheet here so you can do it. I'll tell you guys how to do it. Just set up trade 1 through whatever. Put your starting balance here. Put your risk here. And on the risk, you're going to do equals the cell where you're putting the balance times 10, well, 0.1 because that's 10%, right? And then here on the second cell here on B3, sorry, you're going to select equals B2, which is the cell, minus the risk. So that's going to give you how much you would have once you lose. And then you're just going to drag this down all the way down. You're going to drag this all the way down, and it's going to do the math for you. So as you lose, you can start to see about how much you're supposed to be risking. And that way you can kind of make a plan expecting what to do. Now, I'll be honest, once I get to $100 or less right here, that's where I typically do a flat $90 to $100. So instead of it looking quite like this, it would look more like this. It would be the same thing all the way up until this. Once it gets there, it's going to be this. So it's still the same thing, but we do $100 like so. Okay. So similar, but once I get it below $1,000, then I'll just do $100 flat or $90 flat, whatever the case may be. So I still have about 20 trades, give or take, worth of room. Because once you get below these numbers, yes, you can drag it out. But honestly, like if you're risking less than $50 per trade on a futures contract, it's going to be really difficult right now because NQ is extremely volatile, and it's just not really realistic to be risking less than that right now. It's just, you're not going to find moves for less than $50. So yeah, that's the video. Thank you for watching. Bye.